today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course.
Japanese auto giants Nissan and Honda are in talks to form an alliance. That's according to a source close to the matter. But there's one European party that will take a particularly keen interest in how things develop. French automaker Renault is Nissan's largest shareholder. Two sources have told Reuters the car giant is open in principle to Nissan pursuing talks with Honda. The sources said Renault would examine all the implications of a tie-up to ensure its own interests are protected. Japanese auto giants Honda and Nissan are reportedly in talks to set up a holding company. The move could help them share more resources to face tough competition. A spokesperson for Renault said on principle the automaker supports Nissan's efforts to restore its business situation, but they declined to comment on the current merger talks. The talks were first reported by Japan's Nikkei newspaper. Investors were pleased by the report as Nissan's stock rocketed up by close to a quarter. Renault jumped up over 6%, but Honda dipped 3%.
On Wednesday, the US Supreme Court decided to hear arguments over a bid by TikTok to stop a likely ban of the app. It and its China-based parent ByteDance are facing a law intended to force a sale of the popular platform, which boasts over 170 million American users. The Justice Department argues that as a Chinese company, TikTok poses, quote, a national security threat of immense depth and scale because of its access to vast troves of user data. Supreme Court justices will be hearing arguments on the matter on January 10th, with the ban looming a little over a week later on January 19th. TikTok on Wednesday said it was pleased the court will take up the issue. In their filing to the Supreme Court, TikTok and ByteDance said that, quote, if Americans duly informed of the alleged risks of COVID content manipulation choose to continue viewing content on TikTok with their eyes wide open, the First Amendment entrusts them with making that choice, free from the government's censorship. The companies asked the Supreme Court on December 16th to pause the law on First Amendment grounds. That came after a lower court in Washington, D.C. rejected those arguments earlier. Congress had passed the measure back in April, and President Joe Biden, a Democrat, signed it into law. Senate Republican leader Mitch McConnell on Wednesday compared TikTok to, quote, a hardened criminal. He urged the court to reject any delay. However, Republican President-elect Donald Trump, who unsuccessfully tried to ban TikTok during his first term in the White House in 2020, has reversed his stance. He promised while running for office he would try to save the app from a ban. In a press briefing Monday, he said,
I have a warm spot in my heart for TikTok.
Trump takes office on January 20th, the day after the TikTok deadline.
Asian stocks took a hit Thursday, following Wall Street lower after the Federal Reserve warned it would ease the pace of rate cuts. Japan's Nikkei index fell over 1% in early trade before recovering some ground. MSCI's index of stocks around Asia outside Japan was down 1.6% by early afternoon. A day earlier, the Fed did cut rates by 0.25 percentage point, but Chair Jerome Powell gave a cautious outlook for next year.
We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation.
The prospect of slower rate cuts helped boost the dollar. By Thursday, it was sitting at around 2-year highs versus other major currencies. The focus then shifted to the Bank of Japan, which kept rates on hold as expected. However, one BOJ policymaker did vote for a hike, suggesting that a move to raise rates remains on track for next year. In a statement announcing the decision, the bank said Japan's economy was recovering moderately, but with some lingering weakness. Analysts say a feeble yen will be one factor pushing for rate increases, as it raises inflation by making imports more expensive. Now the decisions by the two central banks underscore the challenge facing policymakers ahead of one big unknown. What exactly will a new Trump administration do? Fed Chair Powell said officials were trying to assess the impact on inflation of the president-elect's promised tariffs and tax cuts. Last month, BOJ Governor Kazuo Ueda highlighted Trump's policies as a key risk for next year. Apple is talking to Tencent and TikTok owner ByteDance about using their AI systems in China. That's according to Reuters sources. The tech giant has started to roll out iPhones equipped with OpenAI's ChatGPT, but the US bot isn't authorized for use in China, forcing Apple to find an alternative. The sources say discussions with Tencent and ByteDance are at an early stage, and there was no comment from any of the companies involved. Winning the Apple deal could be big for any Chinese firm, with the country's market for AI systems crowded with different players. Dozens of models have been launched there by both big firms and startups. Besides Tencent and ByteDance, that includes the Ernie chatbot from search engine giant Baidu. Apple has reportedly also been talking to Baidu over its systems. But media reports this month suggest they have faced setbacks over technical issues and disputes over access to iPhone user data. The absence of AI capabilities on Apple's products is being seen as a big negative in China, where the company faces declining market share. It has faced a battle to stay in the top 5 smartphone sellers there amid mounting competition from local rivals. Chinese giant Huawei already has a handset on the market with built-in AI powered by its own proprietary model.